Bulls under pressure. This is how Glassnode, an on-chain research company, recently titled their newsletter. Now, I come to a different conclusion with the exact same data. Let's have a look at some of those on-chain metrics and let's have a look at what I believe will happen with the Bitcoin price going forward. Because here's the problem. Even though we try to be as objective as possible, we look at as many data points as we can, we still wear our rose-colored glasses once we are invested, right? We want the price to go up, so we have to actively look for the potential flaws in our thesis. So I'm not going to go through this entire newsletter, but I will post a link to that newsletter down below. I will selectively bring out the things that I believe do not support the final conclusion. And the final conclusion of the newsletter can be found over here. Drawdowns across our current cycle remains favorable when compared to historical cycles, suggesting a relatively robust underlying market structure. In other words, this apparently is just a dip and we are not starting another bear market. This is where I am personally contrarian. And yes, my glasses might be tinted as well because I'm not long Bitcoin anymore. I'm now shorting the altcoins. But let's look at the data. Here's the first interesting chart. It shows us a comparison of bull markets, right? The relative growth in bull markets with their maximum drawdown within the bull market. Now, what can we see here? We see that each bull market, we tend to get less and less returns. As in, we had a more than 400x in the bull market from 2011 to 2013. Then we had maybe an 80 or 90x in the bull market of 2015 to 2017. Then it was only a 20x in the recent bull market from 2018 to 2021. And this time we are only at a 5x or so. The trend itself isn't that surprising. It would be definitely though surprising if this bull market here is going to generate the same profits as the bull market in 2018 to 2021, right? It would be way more logical to see declining returns over time, continued declining returns, because of course the market cap of all of crypto is increasing with time, and thus it takes more and more capital for the same kinds of percentage gains to occur. And so everybody is talking about this cycle theory, right? And that we are in the beginning of a cycle and that we should shoot up from here. But when we actually look at, for example, the returns since the halving, they're not that consistent. Check this out, the price performance since halving across those different epochs. The second epoch in red had quite a bit of a run up. The other epochs didn't really move too much, right? And now we are even underperforming relative to the other epochs. And I believe the reason for that is that the supply shift isn't actually that large anymore, right? The halving only changed the additional issuance by 0.85 percentage points per year. So the mining issuance moved from 1.7% per annum to 0.85% per annum. That's not that much, right? This will not cause many percent or potentially even many X's in return. What I believe is more important is what are the long-term holders doing and what are the short-term holders doing. And here is data I interpret very differently to Glassnode. This shows us the total supply that's held by the short-term holders. And this tends to rise as the price tends to go up because the long-term holders take profit with increasing prices. That means that the more supply is held by short-term holders, the more unstable the rally becomes. Because the short-term holders want to make short-term profit, right? And we see just a little bit of a dip, the short-term holders panic. The more we see the Bitcoin being held by the long-term holders, the better, right? Because the long-term holders don't sell that quickly. We've got a fundamentally more sound market structure the more it's been held by the long-term holders. And we can see this time and time again, whenever the short-term holder holdings are elevated, we tend to potentially turn around. Whenever we are low in the short-term holders, we tend to see a lot of accumulation by the whales and by the long-term holders. Since the beginning of 2024, the short-term holders buy back in again. And this is also when the relative price appreciations of Bitcoin rather tended to decline. We've actually rarely seen that the short-term holder supply increased to then go sideways to then increase again, right? Usually it increases, then goes sideways, then goes down. It increases, goes sideways for a bit, then goes down, right? We see a pretty clear wave pattern. We already increased since beginning of the year. Now we go sideways. What will happen? Since a lot of short-term holders are now in losses, probably this will go down again, right? Bitcoin is a wealth transfer mechanism from the impatient to the patient. If you've got a diversified portfolio of all kinds of assets and you've got Bitcoin as one of those assets, and then your Bitcoin doubles and triples and quadruples in value, suddenly your Bitcoin allocation within your portfolio is so large that you will take profit, that you will balance out your portfolio. However, if you're just short-term trading and you hope for the price to go up in the next week and then it doesn't, then it goes down by 5%, then you might be panicking, especially if you use leverage, right? Maybe then you're down 20%, 30%, and then you exit the market altogether in an asset that tends to go up over the very long term. It's possible to lose money in a long-term appreciating market if you're simply just buying when everybody is hyped and you're selling when everybody is depressed. You have to be contrarian sometimes. And again, there was quite a bit of Bitcoin flowing into the short-term holders' hands, and that has stopped, and that might reverse. And of course, when the short-term holders sell, this has some impact on the price as well, not a positive impact. So far, the short-term holders haven't yet sold. So we see the short-term holder profit in orange, we see the short-term holder realized losses in red. And so far, the short-term holders haven't realized their losses. They have simply just seen their gains dwindle. Only once the short-term holders have realized their losses, only once they have given up, then we tend to see the bottom. But as said, they haven't yet given up, right? There's still quite a bit of ownership by those short-term holders. And so even though we look at the exact same graphs, I don't agree with the conclusion that Glassnode makes. Let's look at a few more graphs. Recently, there was a bit of inflow into the Bitcoin ETFs again. Some news outlets wrote about this, right? Some people got really excited about it. But over the long term, the supply that's been held by the Bitcoin ETFs didn't really grow in the last 3 to 4 months. It barely grew. There was barely any change. How can one get excited about a change from 4.2% of all of Bitcoin being held by the ETFs to currently 4.4%? And that's over the course of 3 to 4 months. There's more Bitcoin that gets lost every day than that gets scooped up over here. If you look at other charts, we tend to see roughly 2 percentage points of Bitcoin getting lost every year. The Bitcoin ETFs, including the Grayscale Bitcoin Trust, maybe scoop up 1 percentage point or so per year. And so here's what I believe really matters. The realized price matters quite a bit, right? The average cost basis of the market. Are you currently in gains or in losses? When you're in losses in Bitcoin, you simply just don't look at Bitcoin, right? You simply just wait for the next opportunity to sell. So when the market in aggregate is in losses, we tend to see less selling pressure. So that happened over here at the beginning of 2019. It happened during the Corona crash, and it happened after the FTX collapse. The market in aggregate is still massively in gains, and it would only be in losses in aggregate once we fall below $30,779. We can also look at the long-term realized price, at the long-term holder cost basis, and that's even lower, and that also got hit in most of those bear markets, except maybe during the COVID crash. That long-term holder realized price is at only 19,700. So Bitcoin, I believe, is only cheap once it's between 30 to 20K. It's not cheap right now. Now everybody is betting on the current momentum, but I believe the momentum has already slowed down. Otherwise, the supply of short-term holders would continue to grow. It doesn't. There's also more intangible effects here. I made a video recently on how bearish I am on Bitcoin. And usually when you're at the beginning of a bull market, people take bearish videos not too badly because they've already been burned just recently in the past. And so people tend to be somewhat neutral. However, we had quite some nice price action in the last months, right? And so nobody really remembers getting burned massively. And if the price doesn't continue to rise, people rather panic. And so when you're contrarian at the end of a bull market, people tend to push back much harder. And that is what that video was about. Feel free to check it out. Crypto crash, it's getting toxic. I was commenting on the comments on a bearish video on crypto. And so we don't see how the stablecoin market cap is increasing anymore. There's no more money flowing into crypto. It now becomes 100% player versus player. And so what I personally do is I don't try to pick the one altcoin that's depressed. I don't try to fish the bottom in Bitcoin. I short altcoins. And so here's what I do now. I don't try to pick the bottom in Bitcoin. I don't try to buy an altcoin for cheap. I bet on altcoins underperforming Bitcoin and Ethereum. I bet on falling prices. I bet on this chart continuing to fall. Or on this chart continuing to fall. Or how about this one? You can make money when this chart continues to go down. This is personally how I currently generate my alpha. I don't try to find the one winner among 99 losers. I simply just bet on the losers continuing to lose. I believe that's way better. That's how you get the odds in your favor. It's a bit more of a complex topic, right? It's not as easy as just buying an altcoin. You have to also manage your risk appropriately. That's why I made a dedicated tutorial video that's available in premium. It's thebitcoinstrader.com. This video is 42 minutes in length. There's another video that explains relative valuation shorts. So if you don't just want to short on a US dollar price to go down, but actually on an altcoin to underperform Bitcoin or to underperform Ethereum, and you want to know how this all works with collateral and how this all impacts the P&L, there's a theory-based video here as well. It's not the prettiest drawing in the world, but it does the job and explains what's going on. And of course, on top of that, we've also got a Telegram group where we discuss all kinds of short opportunities, all kinds of short platforms. We are now making money with falling prices. Most people get burnt in a bear market. Most people simply just hope for the price to continue to rise. I believe it makes sense to be rather realistic, maybe even tend towards pessimism, because again, most altcoins underperform Bitcoin and Ethereum most of the time. There's no rational reason to believe that the 4-year cycle will continue forever. The halvings technically have less and less impact on the price. And of course, it's always player versus player. Everybody tries to outsmart everyone. And just sticking towards 4-year cycles is probably not going to cut it anymore. If your portfolio is at least $5,000 in size, feel free to check out Premium. You should be getting your money back fairly quickly. If you feel like you don't get adequate value, simply message me within the first week. There is a money back guarantee. There's no risk to you whatsoever to try it out. If your crypto portfolio isn't yet above $5,000, then feel free to check out the free Telegram. The link is down below as well. Looking very much forward to chatting with you over there as well. Cheers.